All right, so I'm gonna be talking about 5 financial wealth investing misconceptions that a lot of people have. So I narrowed the list down to 5 to keep the video shorter, so I just picked five of the first ones that pretty much popped in my head. So number 1 misconception is that wealth equals purchasing with cash. That's not necessarily true, for the reason that when you're purchasing with cash, you're putting more risk on yourself when that's unnecessary. You can use the bank's money to get 100% of the tax benefits and 100% of the cash flow and advantages of owning real estate with majority of your money not even in. You're using the bank's money to get 100% of the benefits. Why would you avoid that opportunity if you don't have to? Therefore, wealth does not equal purchasing with cash. Cash is a last example. There's no reason you shouldn't finance. If you're an educated investor and you have the opportunity to finance at reasonable rates, there's no reason you shouldn't. Then number 2 is house as an asset. That's wrong because your house doesn't generate cash flow necessarily. Your house may appreciate in value, but that does not make it an asset. It doesn't make you money. It's not bringing in monthly cash flow. You don't pay rent to yourself. Therefore, it is not an asset. The third one is investing is luck. That's not true either. It only is luck when you make it luck. But that's the bottom line. You can get your risk down to probably this much, about that much, yeah. You can get your risk down to that low just by doing proper due diligence, knowing where you're going to renovate, know how you're going to decrease operating expenses, and knowing how you're going to be advertising your property and increasing the occupancy. You already know that you're in a submarket. If you properly research your submarket and you know that you're going to be getting definitely some traffic in the area, you should know that you shouldn't have trouble increasing occupancy. So therefore, if you do proper due diligence and you evaluate how you're going to improve the property's potential, you know what I mean, how you're making use of the property's potential, you know how you're going to increase the value ahead of time before you purchase property, you are eliminating that luck. You're making it very, very likely. Like I said, your risk is what puts you ahead in life. There's always going to be a tiny bit of risk of investing, but you're eliminating that to as little as possible by doing that. Therefore, it's not luck, because luck is just, you don't just flipping a coin. Investing only becomes that if you make it that. Number 4 is investing itself is very complicated. Investing itself is not very complicated. Majority of it is common sense, and you just need a decent business sense. People tend to make it seem more complicated than it actually is. Just investing itself, where it does get a bit tricky sometimes, is when you get into asset protection complications and also the tax laws, such as, you get to cash segregation, multiple ways of taking depreciation, other ways of complications that may arise with asset protection. That's when it gets a bit upper level thinking. You can definitely still figure it out, though. It just may take a bit more reading. And I still read about it all the time, but there's no reason that you should just use what you know on this issue when it is way smarter to consult with your advisor, your lawyer, CPA, or anybody who specializes in this area, because no matter what, this is what they do. Therefore, they're going to be able to give you the best results. So the last one is you should only invest in a recession. That's wrong due to I feel like that's just an excuse not to take action, in my opinion, because you're like, oh, it's not a recession, I'm not going to invest. Well, unless the market is about the peak, there's no reason. If you find a property that's very good, you know the potential through the roof, there's no reason you shouldn't get involved and consider purchasing that property. If you already see room for improvement, you can make those improvements. Even though the market is not necessarily in a recession, there's no reason you still can't benefit from owning the property. So therefore, if the market's at the very peak and you're 100% sure. Let's say you lived in this area your whole time, you can identify it's in a peak. There's obviously exceptions with every situation in investing, but that's when you have to make that decision yourself on whether you think the market is about the peak. If you see houses just going one left and right, you see huge construction coming up. A lot of times that the bigger buildings, the huge construction, are the last ones to get there. So if you start seeing a bunch of huge construction, you start seeing buildings going boom, 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 getting sold like that, that may be a sign the market's about to peak, which maybe you should just expand to another submarket. There's no harm in expanding to another submarket if you are almost completely confident that your market's about to peak. But like I said, if you find a diamond in the rough, even though if it's not necessarily a recession, there's no reason you shouldn't get involved if you see potential through the roof. All right, thank you for watching. Please like and subscribe. Thank you.